What's up, everybody? 3-6 in the house, and we are continuing on with our precog arsenal of weapons for charting. And right now we're going to talk about the MACD by precog. Look, this is not your normal MACD that you have, your generic one. This is MACD on steroids, way better, much more concise, and way better visually, and much more accurate in the signals that it provides. So let's take a look at the chart right here. We have Bitcoin. The daily chart for Bitcoin, just our normal chart above with our price action and lines that we have. Y'all know to use your price action, draw your lines, have them up there. At the bottom here is our MACD for precog chart. At the very bottom, I'm going to show you how to use this and what it means. So MACD is basically a moving average convergence, divergence information and then it's placed on a chart using colors, symbols, so on and so forth. So basically you can see it uses the convergence or divergence of the average of price and then spits that out in pictorial form. So for our MACD, we're using a fast moving average. We use the 50-day simple moving average, and then we use the slower moving average. That's the simple moving average, the 200-day. So we're using the fast 50-day SMA and the slow 200-day SMA, putting those together to find the convergence divergence to produce our signals that we have. So it's very easy. When you look at, if you take a look at the bottom here, when you see a green diamond, that is a bull sign, a bull signal, and when you see a red X, that is a bearish sign or a bearish signal on our MACD. So let's take a look at the chart and see how that could be used. And of course, the yellow line is the zero level. The yellow line across the bottom chart, MACD chart, is your zero line. And you can see the MACD above and you can see the MACD below. But you really want to pay attention to those green signals, the green diamonds, and the red X's. So you'll also notice some weird colors on our candlestick bars. So don't let that alarm you. What that pretty much is your yellow candles. When you get the yellow fill, that shows the strength that's usually happening after the bull signal. That shows that trend is getting stronger or is strengthening. So that's where the yellow is. And then you have this aqua color, which shows that once you get a bear signal, that trend is strengthening, that it's getting stronger. So that yellow is the signal for bulls and it's getting stronger, and then the aqua color of the candles is showing strength for the bears. So let's go back and take a look. So I'm going to draw your attention to last year's crash, that consolidation, and I'm going to draw your attention here on the bottom of price action, where you still have the aqua color. And then you get a normal color there, that normal, I know it's very similar, but you get that normal color green. But it's these aqua color that are surrounded in red. You can see the red outline on those candles. But then you get, all of a sudden, at the very bottom of our MACD, you get your bullish green diamond. And even though you get that diamond, you don't show the strength yet, but it's an indicator that bulls are taking over here. And what happens in the next few candles is you see that push up off of support. So remember, used in conjunction with price action, you have major support. You have a bullish diamond down here on MACD. And sure enough, you have this price skyrocket here. And you can see it change color from the bearish aqua color to that yellow color, where you can see the strength just rocket off of there. So you have that beautiful bull signal, that incredible rocket, which takes you to the top of that consolidation range. And of course, you get a red X there, showing that you have resistance and a short-term drop right there, right into yet another. So a swing trader could really use this right into yet another bullish diamond, showing that this isn't just a rejection and coming back down, but this is more than likely just a pullback before you have a resumption of trend. And sure enough, you get a new leg, new yellow candles coming up into another resistance point, another major price action resistance point that you have right here. Now I want you to, these are very, and I love these because they're not lagging, they're very early at times. So I'm going to draw your attention here you have that leg 1, leg 2, bullish legs, and then we get this red X. Okay, so you get this red X right about in this area at major horizontal resistance. Note you still get highs here, but you get no new bull signal here. This happens a lot at resistance, and these are bull traps. These are bull traps. So if you would have stuck with this MACD indicator here, you would have seen that you get no new yellow candles as well. So again, even though this is going up, even though you have a break of resistance, you never get the yellow candles showing what? Bull strength. There's no return of yellow candles here. And sure enough, this eventually drops back down. So just in sticking with this bear X, this bear signal, it would have indicated to you that this was a false breakout. And then you see the price drop back down. Now, remember, you're using this conjunction with price action. So here you have a descending wedge. Remember, you've already indicated that you're kind of trending up because you have this first leg, this pullback, and this second leg. And now you're pulling back into a descending wedge, showing the potential for continuation. So if you wait for that bull diamond, if you were to wait for that bull diamond, here you get it. You get it early. You get it inside of the descending wedge, right here near the top. And boom, you get a signal down here, a bull signal, and look what happens. You get that descending wedge breakout, and you get a return to strengthening signal here in your candles by the change of color to yellow. Remember, the yellow change is a bullish strengthening trend. And sure enough, this thing just goes off into oblivion up here. And you don't get your next red X until you get to this top portion right here. So even trend traders using this on patient, swing traders, can use this exceptionally well. We're on the daily chart right here. And this also works on the hourly charts and the shorter time frame charts, but right now we're looking at the daily chart. They're so effective. So let's look at this red X down here. You get that red X right in this area, right in here. And what happens in the same thing that happened before, you get a new high, but you have no change of structure in the candles to show that strength has come back into price action. Remember, strength showing shows up on the yellow candles. But even though this is making a new high here, you have a bearish X right here on your MACD. Your bearish X, you never get another bull diamond. Even though this is returning up, making a new high, that means you have a bull trap. Man, I love the MACD indicator that we have here and its potential to give you just advance notice. It's advanced. It's in advance of what's happening. So you would not have played this. You would not have fallen for this. And in fact, if you would have stuck to this, the swing trading short would have stuck to this. Look what you get after this false breakout, this bull trap. You get that descent all the way down. Guys, pull this up, use it, go check it out. It's incredible. I freaking love it. I mean, these indicators, these 8 indicators that we have for precog are absolutely outstanding. They're fantastic. They are going to take you into the next level. Get it, use it, love it.